What if it is still possible right now to position yourself among the top XRP holders in the world, even though that opportunity is slowly disappearing? A brand new XRP rich list has just been released, and understanding this data is critical for anyone thinking long-term about accumulation, scarcity, and positioning. Alongside that, there's an important discussion to be had about market structure and what conditions could realistically shift sentiment toward a bearish outlook. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So, be sure to stay focused, as you surely don't want to miss out on this. If you're new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. The updated XRP Rich List provides a clearer picture of how ownership is distributed across the XRP ledger. This information helps clarify where holders stand globally and how difficult it may become to reach certain levels as price appreciation continues. At the same time, it is important to address what would actually signal risk for XRP. From a technical standpoint, the only meaningful short-term concern comes from structure. Since early 2024, XRP has traded within a defined range, repeatedly holding strong support around the 180 to 190 level while facing resistance from descending trend lines above. This behavior represents consolidation, not collapse. After a strong upward move in late 2024, XRP entered a sideways accumulation phase, which included volatility and sharp pullbacks, but no structural breakdown. The most important level to watch remains the multi-month accumulation zone. A decisive break below this support would introduce downside risk and could lead to significantly lower prices. That scenario would represent a legitimate short-term bearish signal. However, as long as price remains above this region, the broader structure remains intact. When emotional noise is removed and price action is viewed from a distance, XRP experienced a sharp expansion followed by sideways movement. This pattern is common in all major markets. Expansion is often followed by consolidation before continuation. Large price swings create fear, but structure tells the real story. XRP continues to trade between its upper resistance near the $3 region and lower support near the 198 region. Until either of these levels is broken decisively, the broader outlook remains neutral to bullish. Historically, markets reward long-term structural positioning rather than emotional trading. Across technology stocks, crypto assets, and traditional markets, the largest long-term gains were captured by those who maintained conviction through volatility. The biggest historical mistakes were not holding too long, but rather trying to time every move, reallocating constantly, and reacting to short-term noise. XRP's behavior since November follows a consistent pattern of upward progression with volatility along the way. Nothing currently indicates a fundamental structural failure. From a fundamental perspective, bias is always a risk. Investors naturally develop bias toward assets they research and follow closely, which is why neutral analysis is valuable. One advantage of AI-based analysis is neutrality. AI has no emotional attachment, no portfolio exposure, and no incentive to favor one narrative over another. In a recent neutral comparison of major cross-border payment entities such as Ripple, Visa, PayPal, and Swift, Ripple was treated as structurally distinct from traditional payment networks. Regardless of interpretation, the key takeaway is that a system without emotional bias reached conclusions consistent with long-term infrastructure narratives. This does not guarantee success, but it reinforces that the thesis holds structural logic when evaluated without emotional involvement. The internet disrupted communication, media, commerce, and information, but financial infrastructure remains largely outdated. Settlement systems, liquidity routing, and cross-border payments are still inefficient. XRP is designed to address these inefficiencies. If modernization of financial rails accelerates, demand, utility, and valuation expansion would naturally follow. Now turning to the XRP Rich List, The ownership distribution highlights how scarcity develops over time. Holding approximately 2,300 XRP places an individual in the top 10% of all XRP holders globally, representing roughly 753,000 people. Holding 8,000 XRP moves that position into the top 5%, with about 376,000 holders worldwide. Holding 10,000 XRP places a holder in the top 4%, while 15,000 XRP places a holder in the top 3%. Reaching 23,000 XRP places a holder in the top 2%, a category that includes approximately 150,000 people globally. At this level, accumulation becomes significantly more difficult due to price appreciation. Reaching the top 1% requires approximately 48,000 XRP. Higher tiers include around 86,000 XRP for roughly the top 0.5%, approximately 169,000 XRP for deeper elite levels, 300,000 XRP for the top 0.1%, and approximately 3.4 million XRP for the top 0.01%. Historically, these accumulation levels were far more accessible when XRP traded at much lower prices. As price increases, accessibility decreases. This is how scarcity forms in markets, not only through supply constraints, but also through rising capital requirements. This pricing effect is unavoidable. Positions that were once easy to build become increasingly difficult to replicate. Over time, even relatively small holdings represent high percentile ownership. In future market cycles, these percentile thresholds will change dramatically. One day, being in the top 10% of XRP holders may require only a few hundred XRP, while being in the top 5% may require only a few thousand. Scarcity compounds as adoption and valuation increase. For this reason, accumulation strategy is best approached through percentile positioning rather than raw token counts. Instead of asking how much XRP is enough, the more effective question is which percentile position is realistic and achievable. Selecting a target range, building toward it gradually, and maintaining discipline over time allows accumulation without emotional pressure. Price appreciation will continue to make these levels harder to reach, not easier. If XRP becomes a meaningful component of global financial infrastructure, even a top 5% ownership position would represent a powerful strategic advantage. In any financial system, technological network, or economic framework, being among the top ownership percentiles of foundational infrastructure has historically carried outsized long-term impact. The numbers will change, thresholds will rise, and access will tighten. That is the natural evolution of long-term markets. Setting a goal, building toward it steadily, ignoring short-term noise, and focusing on structure and fundamentals remains the most effective approach for long-term positioning. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching, and we will see you again in the next video. Goodbye.